Germany, once the economic powerhouse of Europe, is facing a perfect storm. The country that was once the envy of its neighbors is now grappling with a series of economic challenges that threaten its stability. The year is 2025, and things aren't looking so rosy. Unemployment is up, debt is soaring, the economic indicators are flashing red, and the outlook is grim. Germans are feeling the pinch, families are struggling to make ends meet, and the cost of living is rising. The once thriving middle class is now facing financial uncertainty. The golden era of prosperity seems like a distant memory now. It's a full-blown crisis. The headlines are filled with stories of economic turmoil, and the impact is being felt across all sectors. Because we're diving deep into Germany's economic woes, we'll explore the factors that have led to this situation and what it means for the future. We're going to break it down. From policy decisions to global influences, we'll cover it all. We'll examine the causes, the consequences, and the potential solutions. What can be done to steer Germany back on course? It's time to understand why the German economic engine is sputtering. Let's uncover the story behind the numbers and the human impact of this economic downturn. The economic situation in 2025 is a culmination of years of policy decisions, global market shifts, and unforeseen crises. The road to recovery will be challenging, but understanding the root causes is the first step. Remember when Germany boasted about its low unemployment rates? Those days feel like a distant memory. In 2025, unemployment has reached its highest point in years. Lines at the job centers are growing longer. More and more Germans are finding themselves out of work. What's driving this surge in unemployment? It's a combination of factors. Structural changes in the global economy are partly to blame. Competition from countries with lower wages is putting pressure on German industries. The shift to a digital and service-based economy is leaving some workers behind. Germany's debt is ballooning, and it's a cause for serious concern. The financial stability of one of Europe's largest economies is at stake. The country's debt-to-GDP ratio, 62.50%, has been steadily climbing, reaching levels that were previously unimaginable. It's now at a level that's setting off alarm bells among economists and policymakers alike. Think of it like this. Imagine maxing out your credit cards and then taking out more loans to cover the minimum payments. This cycle of borrowing to pay off existing debt is unsustainable. That's essentially what's happening in Germany. The nation is caught in a debt spiral. The reasons for this debt crisis are multifaceted. It's not just one issue, but a combination of several factors. Increased government spending, particularly on pandemic recovery measures and social welfare programs, has played a significant role. The pandemic forced the government to inject massive amounts of money into the economy. Reliance on borrowing to fund stimulus packages has added to the debt burden. These measures were necessary but have long-term consequences. On top of that, Germany has substantial financial commitments to the European Union. These commitments include contributions to various EU funds and financial aid to other member states. The public is increasingly worried about the future. Protests and public outcry over economic policies are becoming more common. Experts are debating the best course of action. Some suggest austerity measures, while others advocate for continued investment in growth. Lawmakers are under pressure to find a solution that balances fiscal responsibility with economic growth. The decisions made in the coming months will be crucial for Germany's financial future. Section 4. The price tag of living inflation and interest rates bite. In recent times, the economic landscape has been dramatically altered by the twin forces of inflation and rising interest rates. These factors are not just abstract numbers. They have real, tangible impacts on everyday life. Inflation and high interest rates are adding fuel to the fire. The cost of living is soaring, and it's becoming increasingly difficult for people to make ends meet. Prices for everyday goods and services are rising, eating away at the purchasing power of ordinary Germans. From groceries to utilities, the price hikes are relentless. Imagine going to the grocery store and finding that your weekly shopping now costs significantly more. This is not just a minor inconvenience, it's a major strain on household budgets. That's the reality for many in Germany. Families are having to make tough choices, cutting back on non-essential items and even some essentials just to get by. High interest rates make it more expensive to borrow money. This affects not just individuals but also businesses that rely on loans for growth and expansion. This impacts consumers looking to buy homes or cars. The dream of homeownership is slipping out of reach for many, and even purchasing a new car has become a financial burden, and businesses needing loans to invest and expand. Companies are finding it harder to secure the necessary funding to innovate and grow, which in turn affects job creation and economic stability. The combination of inflation and high interest rates is a double whammy for the German economy. It creates a challenging environment where both consumers and businesses struggle to thrive. The ripple effects are felt across all sectors, making it a pressing issue that needs addressing. The impact of these economic challenges is visible in the streets, with protests and public outcry becoming more common. The government faces mounting pressure to find solutions to ease the financial burden on its citizens. Section 5. Can the government fix it? Policies and their effectiveness. The German government is under immense pressure to address the economic crisis. They've implemented various policies, including subsidies for struggling businesses and increased social welfare benefits. However, these measures have been met with mixed reviews. Critics argue that the government's response has been too little, too late. They call for more drastic measures such as structural reforms to the labor market and a reduction in external debt reliance. The debate over the best course of action is ongoing and the stakes are high. Section 6. A glimmer of hope. Potential paths to recovery. Despite the bleak economic landscape, there are glimmers of hope for Germany. The country possesses a skilled workforce, a strong industrial base, and a reputation for innovation. These factors could contribute to a potential economic turnaround. However, recovery will require decisive action and a willingness to adapt to the changing global economic landscape. Germany must address its structural economic weaknesses, invest in education and training, and foster innovation and entrepreneurship. The road to recovery will be long and challenging, but it's not insurmountable. As we look towards the future, it's crucial to understand the potential long-term effects of the current economic policies in Germany. While immediate actions are necessary to stabilize the economy, sustainable growth must be the ultimate goal. Current policies focusing on fiscal stimulus, social welfare programs, and industrial support are essential, but they come with their own set of challenges. Over-reliance on government intervention could lead to increased public debt and reduced market efficiencies. To ensure sustainable growth, Germany must implement measures that encourage private sector investment and innovation. This includes tax incentives for startups, deregulation of certain industries, and enhanced support for research and development. Moreover, addressing demographic challenges through policies that promote higher birth rates and immigration can help mitigate the long-term impact of an aging population. Environmental sustainability should also be a cornerstone of future economic policies. Investing in green technologies and renewable energy sources will not only create jobs, but also position Germany as a leader in the global fight against climate change. In conclusion, while the path to recovery is fraught with challenges, a balanced approach that combines immediate relief with long-term strategies can pave the way for a resilient and thriving German economy. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.